If you're still making like a solid double digit return, your money's safe, like chill, like be happy and just know that not every season of life is going to be like 10x return.
Welcome back, investor, to another episode of Passive Income Adventures, where we teach you how to pay for taking more adventures. That is our motto here. And Sarah Miskelley is our guest today. You're really personifying, embodying the take more adventures and figure out how to pay for it model that we have, because you are living what most people would call the life. And I was so fascinated about it when I was first reading your story on LinkedIn. And I thought, I bet there's a big story behind this one. So thank you for joining us today, Sarah, and sharing your story.
It's an absolute pleasure to be here.
Can you give us your elevator pitch real quick, and then we'll jump into learning more about your background?
Yeah, for sure. So I'm second generation real estate. I grew up helping my family manage real estate investment properties in Toronto, Canada, multifamily properties. And I was in real estate sales. And right now I scaled myself out to real estate investing. And I'm a full-time real estate investor slash, I guess, US, Canada, escapee living in Costa Rica. But I also help other people invest in multifamily to create passive income, to live a life of adventure, like you mentioned.
I would okay, so just dive into your background a little bit more, because especially because we have young adult kids that we're trying to turn into second generation real estate investors. We're doing things very differently than the way that we were raised. And I think that that takes a lot of ability to have faith, because we haven't really seen it work in anybody's life that's really, really close to us. Everybody that is living this life are people that we've met through our real estate connections. But you grew up watching this from a young child helping out. So can you take us through that process a little bit in your background, and maybe some of the hurdles that you've had that maybe someone like me, a first generation, wouldn't have, or vice versa, things that I might struggle with that you don't because you had a little bit more exposure to it growing up?
So it has been at this time, and it feels like it's been my whole life. I basically lived with my mom until I was 3, and then I met my dad, and he was a real estate investor. And from there, it just became normalized. You'd spend time going to Home Depot or painting walls or helping to mow the lawn. It just became what I did when I went to my dad's house. And to be honest, I didn't like it when I was a kid. He wouldn't let me watch TV. He wouldn't let me really sit around. He was European, not to stereotype, but like came to Canada with nothing from Croatia, was very hardworking. And he built a real estate portfolio. And he just really treated me when I was a kid as almost a mentee. He never forced me to do things like you're going to be a real estate investor your whole life and this is what you have to do. But he just normalized that that was the lifestyle. You help clean and you help do the books and this is just what you do. And on another side of things, I saw the advantages of that. Like we would go to Croatia for a full summer and hang it on the beach for 2 months and do nothing. And we were able to do that because he started to build a portfolio with rental units and tenants, and he house hacked before it was trendy. And we live in one unit and rent out the others. And when I was 16, he passed away and I had to take over the portfolio. So really hard time. But if you can look at it from the other way, thank God I was trained from a young child to actually know the pieces of what it looked like to be a real estate investor. So those years were challenging, but I think I can see the benefit now. I got into real estate sales when I was in my early 20s, scaled that business up pretty aggressively. But then I also, at an early age, got into passive real estate investing because I kind of had the foundation of active real estate investing from you. And I would say if you're looking to bring your kids into this, at the end of the day, I don't think any of us can control what our kids are interested in. But I think just creating it as normal in their life and having them and giving them the space to select if they want to or not, I think is really empowering. In fact, my dad actually wanted me to be a doctor or a lawyer. And I ended up a real estate investor. So what he did had more impact on me than what he even wanted. I don't think he even wanted me to be a real estate investor. He just thought that the hard work and the diligence and all that was very important. But I think kids are watching you. We learn that when kids are young, when they're 2 or 3, but they're always watching you when they're young adults. And if they don't choose it as their initial career, like if they want to go to university for a BA or whatever that looks like, I bet you once they do that and they start to look at what they did with their family and they see what their family's built, their real estate investing, at least they have the choice. So I think that's what you're really providing young people.
Yeah, that's a really good observation, because for my kids, I want them to know that they have this lifestyle option, not necessarily to be landlords. I just want them to understand that if you want to build wealth, you have to invest, whether It's working a great job where you're making a great income, having a business, but just understanding that in order to retire ever, you need to be an investor. I mean, none of us would ever imagine that you'd have somebody in their late 50s or early 60s that haven't saved up a dime for retirement. And it's not in a savings account. It's in the stock market and a mutual fund. And so we all understand the concept that to retire ever, you need to be an investor. I feel like whether they want to retire early or not, I just want them to know it's a thing because I feel like I missed out on so much by not understanding that there was this whole world out there that I knew nothing about. And so you coming into it from your dad's perspective, let's own a bunch of rental homes and paint the walls and mow the grass. Can you tell us a little bit about your journey when you discovered truly passive investing, where you're investing your money and more getting into commercial real estate? Was there an evolution process for you as well to be like, wait, what? We don't just have to own rental houses? Or can you tell us what that looked like?
Yes, I'd say as I started to learn more about real estate in general, I got to an age of like maturity, like I wasn't a teenager anymore. And I said, okay, there's more to this real estate thing. And through a family friend, I got introduced to private lending. So that's where I'm essentially acting as the bank. And I am lending my money to people that want to take a second mortgage on their property to do XYZ. And because of that family connection, I started to invest 100K here, 50K there into these passive deals, and you get a fixed rate of return. And once you do one and you realize A, it's not sketchy, B, it's actually seamless, and you have C, the security of real estate, I was like, okay, now I'm at this other level of understanding of passive opportunities. And that's then when I went down the rabbit hole of learning about syndications and really the ability to then get into these larger scale deals, which traditionally weren't available to retail investors. I started to really diversify into different asset classes. And now my husband and I are both real estate investors, and our passion is travel. We've lived in a few countries. We're now living in Costa Rica. The reality is, scaling a large portfolio while living abroad isn't maybe ideal. You can do it. I'm not saying it's not possible, but you also want to look at the margins of a lot of real estate these days. Is there actually enough to pay for property management and then also like oversee that property management from abroad? I have a few assets in Canada that I have really great property management on, and the flexibility of passive investing. Once you understand that option, it's just really nice to have a few different options in real estate under the umbrella of real estate.
Are you talking about having properties at the same time you're living abroad from the sense that you're actively investing in those, or what percentage of your portfolio? Let's dive into that just a little bit more about
Mhm.
managing a portfolio from abroad. What's the structure there? Because I feel like people who want to be landlords have a couple rental houses, buy a commercial building. Everybody should probably have a couple of properties that you own just by yourself. They cash flow faster. The smaller stuff cash flows faster. You're not sitting around and waiting for a year or 2 years for an apartment building to turn around. You own it by yourself, so you get all the cash flow. I don't think that's scalable. And so to really build wealth, you have to eventually let go and learn to trust other people and invest with other people. So that percentage of active to passive, like I manage my own real estate business versus I invest in other people's real estate businesses. How does that shift when you're trying to live abroad? Because honestly, the location independence is something that a lot of people look forward to. I am looking forward to it. We've been traveling the last year, and it's made managing our portfolio somewhat challenging.
Yes, I'd say there's a few answers to that. So essentially, with the single family, there's also what I have in Canada is small multifamily. So it's like 5 or 6 units in one place. So already you're simplifying. You're not going to have like a bunch of single families in a whole bunch of different places. So I can have one management team on site for that asset. It's in a high appreciation market, cash flowing well. So that's kind of set. In addition to, I'll include like my husband's portfolio that's in Michigan, and that once again is in a centralized location. So all the assets can be overseen by the same management team. But this didn't happen last year. Like this is like 10 years in the making for him. Mine's second generation. So I just want people to also understand that it's not a quick, easy money scheme. To your credit, and what you're saying is that if you have a few small single families, yes, they may cash flow quicker. It's just that at the same time, like, is it more important for you to own the whole asset, or are you looking for set it and forget it passive income from a syndication? So in terms of like portfolio allocation, I have two small multifamilies in Canada, and then elsewhere a lot of diversification in passive deals. So some syndication deals, some private lending deals, some kind of shares of assets that are going to New York Stock Exchange, just like various things that are real estate related. But I am diversified in real estate, which I'm a big believer in. You don't have to just do one thing in this sector. That's also what's so exciting about it.
I'm glad that you brought up some of those other things outside of real estate and inside of real estate because I probably have maybe even too much of my portfolio invested in real estate, but we have other things that we invest in, some early startup stage companies, some stocks through our various mutual funds and things that we do. And I feel like trying to get involved in a few different things that are going to give you some diversification is really nice. I just haven't seen anything cash flow as well as an actively running business and say a laundromat, for example, is going to cash flow. But if you're renting the space, there's no upside. And so I really do love the combination of an actively cash flowing business like a multifamily or some sort of like a laundromat that actually owns the land that the building sits on, owns the building. And so I tend to focus really heavily on those cash flowing businesses that have a real estate component to them, just because I feel like it gives me both cash flow and upside. Do you feel like there's enough diversification inside of real estate? I kind of feel like there is. That's why probably I don't invest that much outside of it because everything that we're talking about is a different thing. Storage units are different than laundromats, and laundromats are different than restaurants, and multifamilies are different than mobile home parks, commercial buildings, where offices, medical office, and warehouses. I feel like there's just so much going on inside of that umbrella of real estate. I feel sufficiently diversified in real estate, even though some people might say that I have too much of my portfolio in it. How do you feel about that, especially growing up in it and seeing like this is the real deal?
Yeah, I mean, like, look, at the end of the day, there's no one way to do anything. Like, if you're comfortable and confident in this, yeah, big surprise. If you're comfortable and confident in real estate and you have different ways to, like, for example, avoid getting really hit by the interest rate increases the last few years, which really could have thrown somebody off if they were in just multifamily, for example. If you had other things to do. So, for example, I had an asset when I had properties in Canada, we converted one of the units into a midterm rental because there's interest rate increases. So then you have the option, even within an asset, to like increase your returns under the same umbrella of it being a real estate property. So I think that the beautiful thing about real estate is you have options with it, technically speaking. There's also different things like you spoke to, self storage, laundromat. But I think everybody has to make their own investment decisions. If you love the stock market and you've seen that you comfortable returns, like go for it. Like I'm not somebody's here to say that real estate is better than stocks. It's what I grew up in. It's what I love. I've seen what it's done for my family. So I don't necessarily feel the need to go try 10 other things.
Yeah, I agree. My family, both on my side and my husband's side of the family, are much more invested in the stock market than we are. And several of them have a few little rental houses, but it's definitely a minor portion of their portfolio, and they prefer the stock investing. So I feel like it's something that's out there, but I think a lot of people misunderstand that what real estate investing looks like. Most people think fix and flip, have a couple rentals, and that having an apartment building or an office building or something like that is just for those rich old guys that we don't know anybody like that.
It
So
used to be. It
back
used to be. It's
yeah,
changed a lot. Yeah.
the
Yeah.
rules, the laws have changed, and so I feel like that's broken it up to I joke that I'm like Mrs. Watanabe, where the laws changed and it opened up this whole world of commercial syndication for like a stay-at-home mom that I didn't even know was out there because it wasn't out there until what, 2015 when those laws started kind of kicking in. And so I
Mhm.
feel like I want you to back up for me just a little bit though. Before you got to that point, you mentioned that your father passed away when you were 16 and that you were in charge of the portfolio as a minor. So, can you take us through maybe those 2 to 5 years between 16 and 18 or 16 and 25, somewhere around there, figuring out like, "Oh, okay, like this is all me now." How do you manage that as a minor? Was there an executor, an attorney he turned it over to, or how did you do that?
Yeah, so there was a full legal process, which I'm sure aware of. Like as a minor, I had representation in terms of legal proceedings. So there was somebody that was like my interest, my person that was for my interests. And so that happened during the legal proceedings. And then once that was complete, then essentially I had my mom. They weren't together, but she was a support system. And then I had to essentially kind of figure out what to do. And there were a bunch of renovations that he was unable to complete because he started them when he was sick and then passed away. So I had to, with my mom's support, really figure out, okay, where do we find contractors? Where do we do this? Where do we do that? But it wasn't really her world. So it was just a little bit of a dance between somebody who's like not an experienced and then also somebody who's a minor. But I think there's always help if you ask. Like you can ask for support from family friends or recommendations for a contractor, things of that nature. So it's definitely a few really challenging years. And to be honest, I probably spent money in places I shouldn't have spent. I probably overpaid contractors. There's probably decisions I'm not even aware of that I made that maybe weren't totally above the line in terms of like the things I was being charged and stuff. But I think that that can happen to anybody. I just unfortunately was like a much younger woman dealing with it. And also just dealing with older men contractors, like as a 16-year-old girl, wasn't always the best experience. But look, like at the end of the day, I think I was given a good childhood and given the confidence to know that like I can do this. And that's just how I was raised. And it really helped me grow up fast and get to the next stage where I ended up, it must have been okay with me because I got into real estate sales as a career. And I had great tenants. I think that's the thing too. People get really scared about real estate investing because they think tenants are so bad. They're going to ruin your house. They're not going to pay rent. I've had the experience for the most part. The tenants are very supportive. If you're good to them, they're good to you. And the tenants in the properties saw what was happening and they obviously were caring. Like there may have been a broken door now that they didn't contact me about. Like I don't know, but there's people are more supportive than I think we give them credit for. Here's a bit of my point.
Yeah, that's true. I've noticed our tenants tend to be just like anybody else. They want to do a good job in most cases, and they just need to know like what that looks like. And then also being able to chalk up, yeah, sometimes the tenants do trash the unit. And we account for that in our contingency plans. And so when you walk into it knowing that, yep, something got bad could happen, here's how I'm going to handle it. It takes a lot of the fear away. But you'd already been dealing with that for a few years. And so when you got through, this is an incredible story, by the way, just taking over this real estate portfolio as a very young woman. And then kind of getting to that point you said when we were talking about before, where these things weren't available for a long time. It was just a bunch of old guys and we didn't know any of them in person. And suddenly we're able to say, oh, I can buy an apartment building. I put some investors together and we can go buy something really large. When were you first exposed to those concepts? Was it through your realtor days?
Not really. I was in residential. So I was in Toronto, Canada. I was selling a lot of condos, houses, pre-construction, and a lot of the investing then came from my own initiative, to be honest. Like I'm just a very curious person by nature. I like learning, I like achieving, I'm very driven. And I wanted to figure out what else was possible within real estate. So once I kind of understood the smaller asset classes, I said, okay, well, what's happening in the US? And I'll just give you a quick yeah, idea between Canada and the US. So Canada, big country, but there's a lot of regulations and there's not a lot of actual real estate relative to the size of the country. The prices are very expensive in a lot of the cities and we have a lot of rent control. The US, just from my exposure to a few different markets through both my real estate investing and my husband's real estate investing, I already saw that there was more opportunity there. And that's when I started to explore the syndication space in the US. And that's when I transitioned into focusing on the US just because there's more people, there's more opportunity. And that was through my own initiative. So joining investment groups, joining mentorship programs, reading a lot of books, watching a lot of stuff online. And that's how I learned about the space. And then I took the initiative to really immerse myself in the community of multifamily, which is then meeting sponsorship teams, building relationships. So it's not, it takes time and effort. But on the other side of that effort is obviously risk mitigated returns and getting access to these larger scale deals, which some people don't have the time to do this. You know what I mean? Like they're working a W-2, they are very fulfilled by their career potentially, but they want to invest as well. This does take time to understand the industry. And that's where I'm very grateful to now be an access point for investors into this world of things.
Yeah, that's a great way to look at it because you're out there learning. You already knew how to take action. You had this portfolio dropped in your lap. You had that background, that upbringing, but at the end of the day, you were very young dealing with this and then getting out there learning. And so all of the books and the mentorships and all of the watching the videos and all that type of thing, you already knew how to take action on things. Do you feel like that gave you a sense of confidence that a lot of us maybe are lacking? So in trepidation buying our first property. Did you feel that way when you switched over to more commercial stuff? That was like, oh, this isn't like single family. I don't know what's going on. It's like, How did you feel during that period of time?
I think that, yeah, naturally I am more of an action taker, like as a personality trait. But I would definitely say that I've become I've become more risk averse as I've gotten older because now I have two kids. And I think as a woman, I just suddenly am like, oh my gosh, I want other people dependence and this and that. So I think I was actually more open to risk in my early 20s and I was getting into more deals that had a higher upside potential, but a lot more risk involved in it. So I'd say for people that are interested, but there's a lot of fear around it, it's to really get the courage, you have to like take the action. And then once you have proof of your own ability, then you'll continue to have the confidence to move forward. A lot of my investors in the deals that I'm doing, we start with smaller amounts, get them very, very educated up front. And I call it learning and earning. So if you can kind of educate yourself, but also put in a little bit of money that you don't feel like if you lost it, it would be the end of the world for you, then you really have that's what you're gonna have to do to move forward. And if you don't take action, like nobody can force you to be honest. That's just we can only do so much for people. But I think once you have the proof that it's worked, then you're gonna go like this, like the hockey stick going up.
I agree. When an investor comes to me, and even if they're accredited and they say, I only have $50,000 to invest, maybe they have a couple 100,000 in their retirement accounts, like I'm cool with that. But what if somebody comes to me and when we were doing deals that unaccredited investors could participate in, and they'd come in and they'd say, I'm not sure how I'm going to scratch together $50,000 to be able to invest in your project, but I really want to. I'm like, I don't want it. If you have to scratch it together, it's not a great fit. I feel like exactly what you said, learn and earn, find smaller amounts, smaller deals that you can do where you feel like if you lost it, it was a good learning opportunity. And when started seeing the prices of some of the mentorships out there where they were five figures or low five figures, I thought, maybe that might actually be money well spent to get prepared for some of these bigger six figure and mid to upper six figure investments. And it just helps me realize like who should be investing in real estate syndications. It's been a difficult journey for me to have those conversations with people who think real estate's amazing, but they just don't really have the barrier of entry dollar wise is so high. Even with the
Hmm.
syndication, minimums are often $50,000, and it shouldn't be somebody's only $50,000. So what do you say to somebody who might be at that point, ready to take that leap? And maybe we can go and look at the other person who's not at that point. What kinds of things can they do to be able to get ready to do that?
Yeah. So if it's somebody that has the capital, and I always am similar to you, and I appreciate that you brought this up, we want to keep it to be a very small portion of somebody's net worth because I don't want to ever be the reason somebody, yeah, like can't pay their bills. And I think that that's also just being responsible and having integrity in terms of your own business. So definitely the conversations at the front of the investments pipeline is just like, well, what is your net worth? And like, is this an appropriate amount of capital to allocate? For people that do have the capital, it is a small portion of their portfolio and they're enthusiastic. Then I definitely think starting to understand the next steps is really critical. So legal documentation and what it does actually look like to move through this process of investing and you getting onto the other side of things with that initial investment to actually understand them, what it's like to get your quarterly reports and see the money land in your bank account. Like that becomes so real for someone. For other people that are interested, but they may not have the capital, there's always a skill set that I'd say that person has. Like, first, you can do like creative financing. There's a book on that. It's like low to no money down. I think it's one of the bigger pocketbooks. So, just finding other value that you can bring into a deal. I'll give an example. Like, right now, I'm in Costa Rica. I'm consulting on a development down here. I've never done real estate development. So I'm putting myself in a position to learn something where I'm maybe doing things that I wouldn't be doing if I was in a more of an area that I had a lot of skill set in. But it's just putting yourself in those rooms to learn more about something and then it becomes normalized around you. So I think if you don't have the capital, start surrounding yourself with people and see how you can kind of like add value to them, whether that's you having the time to go around and actually hunt down deals and getting an acquisition fee or whatever that looks like. I think if you're committed enough and passionate about anything, you can really make it work. Obviously, time dependent. And I'm always a little bit more responsible as a mom now because I feel like in my early 20s, I'd be like, you can do anything, you have the time. But it's like, no, like with the responsibility of understanding that you have other things going on in your life, but allowing that to be okay and saying, like, this is what I'm capable of in this season. and just accepting that as what's so right now, and but not allowing that to be a barrier to actually like moving forward, whether it's as fast as you'd want it to be or a little bit more slowly.
Yeah, oh, and I think that's the thing is most people are we're just impatient. We're just impatient. When I
Hmm.
said, "Okay, I'm gonna do this real estate thing for 3 to 5 years, and my husband should be able to quit his job at the end of that." And about year 4 and a half, I was like, "Oh man, this is taking longer than I thought it was going to." And then my impatience was almost ruining my ability to grow because my impatience was making me more it was making me more down, and I wasn't able to stay positive and focus on what I needed to do. And so getting that impatience under control for me has been key, and for my investors when I start them to start seeing the same signs of that impatience, like I thought if I put $50,000 into syndication that I would be a zillionaire in a year, and just understanding like no, it can be double what the stock market is doing, but it's still it's not
Still
$50,000 is
takes
not going to make you
time.
rich in a year. Yeah.
Yeah.
Yeah, and I think there's a lack of understanding about how these numbers and these return metrics actually work for people to say, "Oh yeah, it's still going to take me 3 to 5 years of pretty aggressively making more money and investing more money, and I still need to have $2 million invested in order to live off the passive cash flow and not have to work." And that's no different than the stock market that we all have been well exposed to. It's just you might need less money put up than you would with the stock market, but not that much. It's not that much less. So, are you finding that educational aspect of working with wealthy wealthy individuals, but who are new investors, is that really where you're specializing right now, or are you looking at people who have done this a couple of times already?
I'd say it's a mix. I think there's a part of me that I just enjoy because I got a leg up like that mortgage broker when I first started. That experience of someone introducing me to like a whole new world of things that now got me to where I am now. That lights me up. It makes me very happy. I think the challenge in that space is exactly what you spoke to. It's like there's some people who have the capital and there's some people that don't. And it's being responsible for my time and also for their time in terms of like, okay, can this actually work with you? For you, I should say. But I really enjoy introducing the asset class to people through education. And I used to do like courses and mentorship and all the things online. And now I just really enjoy educating my investors. So just by working with me, they're getting educated and they're learning about the dynamics of this. And I would always be the first one to say if they're getting into real estate, if they want to buy a single family, I'm never going to dissuade them from that and say you have to do syndication. I think like diversification in real estate, like we were talking about, is really important. But I think just being that sounding board and that mentor for somebody to really get into a whole new world of alternative investing in real estate is very exciting for me. And on the other hand of things, there are a lot of investors that I work with who they already invest in the stock market. They may have a 401k or an IRA and they just want to make better returns. Those people are just going to be more quick to take action. They don't take as much education, but they also do still need to understand the dynamics of the deal structure. They may just they pull the trigger quicker, right? And they have more access to capital. So I think that it is a bit of a mix with my investors, and I'm happy with that because it's what makes me happy at the end of the day that I've actually helped somebody learn something.
Yeah, exactly. I find the reward of helping to educate people to get into the world of alternative investing to be well worth the time. And some people say, "Oh, no, I don't want to work with people who are new at this. I just want people who are decisive and they can pull the trigger. Let's just get the investment done." I think there's a certain portion of the education itself that's really gratifying. And I thought for me it was because I grew up not knowing this was a thing, but for you growing up, like maybe not knowing syndication was a thing because it wasn't, but knowing that real estate and wealth through real estate was a thing, are you feeling like that feeling that you just really wanna pay it forward, or where did that feeling of wanting to educate others into this world come from for you?
Yeah, I think like I've done the grind. Like, even though I've had the portfolio, like I was really committed to building $1 million real estate sales business. So I got up to 400K a year. And like that takes something in terms of my time. So I was working 7 days a week. I was in that like aggressive career growth stage. So I know what that feels like. And I know what people are dealing with. And that was a decision that I had to then make. It's like, I know what this looks like. I know I can do well in this. I know what the money looks like. And would I rather have time with my kids and be able to live in Costa Rica and, enjoy the simple things? Like, we don't live a fancy life here. We drive around in an ATV. I surf in the morning. Like, it's not a Chanel bags type of place, but that just felt better for our family. And that's like what I've seen the two worlds. And for me and for a lot of people I'm learning is whenever I talk about Costa Rica on LinkedIn or you love traveling. So I know you understand this, but really resonate with it. So I know there's people out there that are just looking for enough to live that life that they envision versus like the more safe that a lot of us are just indoctrinated into naturally by being in a capitalist society. And I don't get me wrong, like I'm a capitalist. I love working, I love money and all of that. But I like to know there's an option not to do that if I opt not to.
Yeah, there are ways to make good money outside the hustle, but you did your hustle. You put that in for a lot of
Mhm.
years, and in a way you're still doing the hustle because none of us who are higher achievers can really just completely
Oh, we
walk
can't
away
stop.
from
It's
active
it's it's
investing.
I think my husband would be happier if I was just like happy being a housewife, but like I can't. I'm like I just like producing results. Like I don't know. Like it's how I was raised. Look, I don't know. I don't think you're the same.
I didn't actually realize I was that way until probably well past my 30s. It wasn't something that I was introduced to early on in life. I was one of those kids who always felt like I was an underachiever, like I wasn't living up to my potential and all of that. And I realize looking back on that now, it's like, oh yeah, you're just an entrepreneur and you think most of this other stuff is stupid. It's just that struggle of kind of coming to that identity that I maybe wasn't cut out for things the way they were. And instead of using that as a saying, oh, I guess I'm not going to be very successful, was just finding a new group of people who were like me, who were successful, me like, oh, what are they doing? Right. And go out and
Yes.
go out and
Yes.
copy that. Yeah. Which I guess is the point of podcasts like this is to introduce the audience to people who are doing things a little bit differently so that hopefully they can identify with some people who are like, wait, whoa, what's going on there? Like, back up. Let me hear more about this story and this technique. So, can you, in that light, can you share with us what you are doing right now and what's working for you right now and how you're helping investors currently?
Yeah, right now, I mean, last year was challenging in real estate. Like, let's not overstate the obvious. And last year was a really great adjustment and lesson for many people. And what I'm doing right now is last year I kind of took it easy. I just focused on building relationships with my investors, really learning more about like what they were looking for, what concerns and considerations they were having, while at the same time really building relationships in the US with top tier sponsors. So making sure that when I'm bringing opportunities to my investors, they're things I would invest in, that I'm either co-investing in, or that I have a lot of confidence in the team. So I'm not sure how much your listeners understand the commercial landscape, but there can be many people sponsoring deals, but there's a lot of people who don't really know what they're doing. And when you're investing passively, it's critical to know that the people know what they're doing, and that they're being good stewards of your money. And that does take time. So for full time, I'm out there meeting people, doing the due diligence on deals. And then right now, I have a few opportunities that are coming down the pipeline this year. There's some distressed assets. There's also industrial assets, which are great because of all the onshoring going on in the US and a fund. So there's just a few things that I'm working on bringing to my investors this year. And I'm finding that focusing more on like pref equity and being higher in the capital stack and just having more collateral securing investors' capital. That's what's really attractive right now, and that's what I'm looking for. Because there was a lot of fear in the market last year, and we're not out of this time, but I don't think it's a bad time to invest. There's so great returns to be had, and there's a lot of opportunities this year just with distressed deals coming online. But first and foremost, education. So ensuring people are getting in, they can kind of look to what happened and not have that happen to them, essentially.
Yeah, I think it was a rough year for real estate, and that makes this year a rough year for raising capital. So, can you speak to your potential investors who might be listening about why it's actually a good time to invest in real estate and not because we're trying to sell something? It's like, where are the opportunities right now? Because it's not a good time to invest in everything. It's not just buy some
Yeah.
real estate right now. What is good to invest in? What do you like? You mentioned a few things, getting into some distressed deals, getting into some things that aren't distressed, non-multifamily stuff, finding a way to be higher in the cap stack. So in our case, we actually went to a debt fund this year, providing senior debt because you don't get any higher in the cap stack than that, and focusing on some other ways to stay involved in real estate and in a way that, like you said, was a little bit safer. So can you tell us the kinds of things that you're finding you're having to pivot to and And here's the most important part. When do you think you'll have the signs to recognize to pivot back into some of the things that you're pivoting away from? Like, what are you looking for to say, okay, now's the time to get back into whatever?
Yeah, for sure. So I think like right now, been an interesting time for many people. And the biggest thing that I'm having investors look at is kind of the things that you spoke to. So how can you get a preferred position in the capital stack so that if anything happens to that deal, you're getting your money out before other people essentially is something that we're really interested in at this moment in time. I would say right now, getting into other things that are taking advantage to the fact that market ups and downs are built in. Like that would just be the context of all of this is all normal. There's always going to be ups and downs to the market cycle. It just can feel really painful if you get on the bad side of that and you're essentially the one suffering. But if you can know that, okay, in each market, there's going to be certain things that are preferred to invest in, like you were mentioning right now, the debt funds or the distressed asset. And what that is, for anybody who may not know, is essentially if somebody couldn't afford to keep their property because their margins got too tight and they may have to go to foreclosure, essentially they would sell that property and we'd be able to acquire that property for a lot less than we may have bought it for a few years ago when the market was hot. So there's already a delta built in essentially. And you have a lot more room to then value add and then take advantage of rental rates that are still going up, however, more slowly in certain markets. So that would be like the distressed assets. What you spoke to, I think, is a really great opportunity. So the debt funds and then the vulture funds is another term that isn't so hot, but it is what it's called. So just looking at in each market cycle, how can you still profit as an investor? And I think the other component is honestly, sometimes people like need to not be greedy and realize like, okay, maybe you were making like a 2.3x equity multiple like 3 years ago and in 2 years and like, oh my gosh, amazing. Yeah. But if you're still making like a solid double digit return, your money's safe, like chill, like be happy and just know that not every season of life is going to be like 10x return. But if you're still building that nest egg and you're getting down that path of whatever that goal is for you, whether early retirement or using more money to travel or whatever it is, you're still on that path. And I think that's critical for people to keep in mind, even if it's maybe less than they were making 2 years ago, that they're still making good money and accepting that and acknowledging that. And then how do I know when it's going to like pivot? I mean, I don't have a crystal ball. So I don't want to sit here and pretend I'm like somebody predicting the future, but I think it's just being in tune and keeping up to date with what's going on in the markets. And if there's certain markets that you're very interested in, following the trends in that market and understanding what it looks like when things start to shift. It becomes in this day and age with so much access to information. I don't think there's as many secrets to be honest. Like as the market starts to transition, there's going to be quite a few people knowing that that's transitioning. So just take advantage of that. But I would say in terms of when that's going to happen, I'm not going to say a prediction.
Yeah, anybody who tries to tell you have a crystal ball, I love that you brought that up though, because I always say if somebody's making some bold predictions on timing or specifics, it's like they're kind of trying to pull one over on you. But like you said, watching for certain markets and the indicators that prices are coming down, and then being able to just run quick back of the napkin numbers. You don't have to be an expert at spreadsheets to be able to invest passively in a deal. I even know operators who aren't amazing at spreadsheets because they're great operators or construction managers, but they have somebody on the team who is the spreadsheet geek. But that doesn't necessarily have to be someone who's passively investing. Just being able to just look at the basic numbers, because as you said, there's going to be a delta there. It's like when you start to see some shifts, like, oh wait, I know what properties like this go for per unit in this area, and I'm seeing that go down, and I'm seeing rents go up. That's just some basic stuff that we're paying attention to because we don't know when it's gonna happen. We kinda have to be watching for that. So do you have anything that you have backed off of that you're like, "I still think this is a good opportunity, just might need to wait a little bit for before we get back into investing in that?"
You know what? Like we had some stuff in Florida and that market was great. Like there was just a lot of activity. Yeah, like there was a lot going on, especially I moved to Florida during COVID. Who didn't? Like, it was great. It was funny, like, we were in Miami one night and I was at dinner and there's people that are trying to bid on houses, like, in Miami that were from there, and they're like, "Every other bidder is not from here, like, they're ruining our market." But point being is there was just a lot of action and activity in those markets, but then you saw, like, the insurance costs go up. So, it kind of, like that's then a market we got away from because the numbers just didn't pencil out anymore. So that's really the advantage for somebody who's coming in and as an LP, as passive investor is like the people that are in it, like you and me, like we're doing this all the time. Like we know the markets, we know what's happening in them, we know when they're changing, we're paying attention to the trends and things of that nature to get to a point like in Florida where it's like actually this deal coming up in Florida, but we just know that the insurance went up a lot on these assets. Like, is that still the most viable investment or is like just a little bit too risky for you at this season in time? So those are some of like the factors that I can use as an example recently.
Yeah, we started planning our move to Florida during COVID, like, when we realized, like, we're not going back to the office anytime soon, and then we got down there late last year, and insurance prices the year before, we're like, "Okay, I don't actually wanna live here," so we're back in Texas.
There you go. Texas is warm, so well, like warmer, so you're good, I think.
Yeah, yeah, my kids say they miss snow, so I'm like, "Hmm, with this Costa Rica thing, can I sell them on that?" They actually wanna move to Alaska. Of all places, right? They're like, "I wanna see the northern lights and the summer night." And I love the snow, and I'm like, "Okay." But I think
Yeah.
that's kind of the freedom when you are investing with the mind to being location independent, is you start thinking about things differently. It's like, "Fine, I'll go to Alaska. I can still run my funding company from there and let the kids kind of explore and do what they want." So, well, what was that kind of location independence thing that took hold with you? Because you mentioned that you lived in Argentina and Belize, you moved to Florida, now you're in Costa Rica. Where did you get that idea, like, "We don't have to be here, like, we can go wherever we want"?
Yeah, so I think first and foremost, travel bug was when I was a kid. So my dad took me on a lot of trips. That was like something I just did as a child. It was travel was a big passion in my family. But I think the biggest time where I saw it was a reality was when I met my husband, and I think he retired when he was like 20 from just real estate investing in Michigan. And then he just for like over 10 years was just like living in different countries, and that was his lifestyle. And when I met him, at the beginning, he seemed like I just that what? Like, this isn't reality, but this is the whole point of like what I'm trying to share is like once you get into the world of somebody where that's like their normal, then that becomes normal for you. Just like people investing in real estate or like investing passively, it may seem like, oh my gosh, like that's not for me. Like that sounds crazy. And then you're in it and then it becomes normal. And then now, last couple of years during COVID, we just were like, we're not going to be in Toronto. There's a lot of politics happening. It's just not healthy. I was pregnant at the time. And we just went and lived in, yeah, like a few different countries and just really got a taste of like living long term abroad. So that when the opportunity came for Costa Rica, I already knew that this was a good fit because we tried a few different places before. But now the impetus is more on stability in a foreign location, which is what we're creating here in Costa Rica. And once you go to other places, you see that there's a lot of people doing the same thing. You don't think there are, but there is a lot. My whole town is expats from Canada. There's so many people from Toronto here. It's crazy. Like a joke.
Yeah, yeah, I think it's amazing when you start getting out there and finding, like, your flock of birds that you can fly with,
Mhm, mhm. Yeah, it's
versus
cool.
the crabs that hold you in the bucket, and then you find
I
the
love it.
the flight partners, and we've definitely seen that. People are the same no matter where you go in situations and things, like, it's the same no matter where you go, yet at the same time, it's different no matter where you go, and I've really enjoyed exploring that with my kids. I lived abroad when I was in college. I lived in Eastern Europe for a while, and I really wanted to get back to that and have been for decades, and we finally feel like real estate investing has given us the location independence that I personally have been craving for many, many, many years, and giving my kids and even my husband a taste of it has been fascinating. So I don't think that we really would have been able to do this otherwise, just dreaming about it. But you have gone out there and you have made it a reality and found a partner that is frankly as crazy as we are, who like
Yeah. Yep.
it's almost like you're both committed to this lifestyle of alternative investing and time freedom, and you found each other, and it was like, well, let's go build a life around that.
Mhm. Yeah, 100%. I think I'm very, like, lucky in that sense to have that support system and that, like, big thinking around me, and I'm really hoping that we can kind of, like, put that in our kids at in some level, right? Like I said, I'm happy if they become a Wall Street banker, like, I don't really care what they wanna do, but I think just being able to be here and they're gonna be bilingual naturally because like, my son's in school in Spanish right now, and just living, like, a low tech life, like, we're in a surf town, we may end up in Toronto in 5 years, like, I don't know, but just in this season, this just feels really good for them and for us, and just I'm grateful to be able to do that. And maybe it's not for everybody, but for us, it just feels like a good fit. And that's the purpose for us right now for investing and building our portfolio. And then for me personally, educating other people on that it's possible as well.
So this is normally the part of the show where I start asking people like, what's coming up in the future for you? What other bucket list items do you still have to check off? But I feel like what you just said there was like, we're going to take this one day at a time and see what comes at us. Are there still things on your bucket list that you're like, before I retire, before I die, I really want to do this, this, and
Yes.
this?
So there's one thing that's like really important to me right now. Like I want to donate $1 million to God Behind Bars. So it's like to me a charity that like just I don't know, just something about it. They basically reunite families and they really bring the gospel into like prisons where like people are pretty helpless and it just gives them hope. And just something about that charity just got into my heart. So that's one of my big goals right now. And then secondly, like I really want to go to Japan. I don't know. I heard it's trending now, but it just feels like a country that just is so beautiful and has such a rich culture and history. And we also really like F1. So we want to go to F1 in Japan. So there's my like one thing that I really want to do. And then also one thing that I'm really passionate about fulfilling on. And all of that I'm giving the time and space to do because right now we're just very, very happy enjoying our time here. Like we don't really feel much need to leave. Like I was saying before we started, it's just we're very fulfilled in this place in Costa Rica. So good.
Yeah. Do you feel like living abroad, some people put this expectation on you? Like, so how long is this going to last? Like, when you coming back? You're like, no, I actually might stay here long term, forever.
Yeah, it's you know what, like, because we've done it a few times, we don't get that as much. I think I get more the question from my mom, like, "Do you really like it here? Like, really? Like, is this really what you want?" But I think once you say, "Yeah, no, it's serious," like, the biggest thing is once you have kids, there's, like, an actual impetus to stay because you want them to have stability, you want them to be with the same kids in school, you have to stay for a school year. So that naturally just lends us to staying. So right now, I have no plan to leave until that season feels like the right season to move on to the next place.
Yeah, it's nice to be able to have the freedom to be able to put off those kinds of decisions, possibly forever, because you can. You have the
Mhm.
you have the ability to be able to just say, "We'll see what life brings us." It's living the life. It's living the life. So before we wrap up, I do want to ask, I want to paint a very realistic picture of what to expect with financial freedom because I know that some people think that it's going to be the be all and the end all, and suddenly they're living the life. What is the biggest challenge that you've had to undergo to create this lifestyle that you would like to warn people about to either be prepared for or to be able to minimize?
Yeah, it's a great question. And with, I would say, like, at the end of the day, like, more money is not going to make you happy. Like, it'll make you feel more secure. And that's kind of cliche to say, like, oh no, more money, like, it buys happiness, all those things. But I just think, like, unless you're already, like, set on, like, what you makes you happy, like, if that's long walks on the beach or like reading books or more money is not going to really make a difference for you then. Right. So it's just like understanding that the goal of financial freedom should more be like, okay, like what are the expenses that I need to cover to then do the things that fulfill me? And those things can be very basic. I think everybody's trying to like make their life really epic because we're all on like social media all the time. But most of the times, like my days are very boring. Like I just get up, take my kids, like get them ready, go to like a co-working space just to like work on my business because that's the other thing. My second thing I was going to say is like if you're ambitious, once you hit that time where you don't actually have to trade time for money, you may find yourself very bored. And unless you can find something else to like keep your mind active and keep you busy, like you probably won't be happy. So I would just say like you have to understand that you aren't gonna changing your location or like changing the amount of money you have isn't gonna change like your internal state. So just I would say that's just something that's very important for people to know if they're like chasing this as like an objective. But you have to kind of understand the way you operate first. So that would be my two most important points.
Yeah, so I'm hearing several things here. It's like taking the time to get to know yourself because you're going to be that person with money the same as you are
Yeah.
without money. Making sure that we're recognizing that life is made up of smaller moments and not everybody's living it in this way. And I think it's funny when we hear about somebody like Julia Roberts is driving her own kids to school and is not going to make movies for a while. And we're like, oh, that must be so nice that she can step back and live this kind of lower lifestyle and yay she likes knitting, right? And we glorify that, but at the same time when we want that to do something a little bit boring, sometimes there's like, what, you're not going to live an epic life jumping off cliffs on Instagram? And so just being able to recognize like what it is we want our actual days to look like is very important. I mean, I like to jump off an occasional cliff, but really not every day.
Yeah.
Well, Sarah, how can people get a hold of you after the show? And I always ask people not only how can they get a hold of you, but why should they get a hold of you?
For sure. So I'm on LinkedIn a lot. My name's Sarah Miskelley. You can kind of see it on the screen here. That's just a great way to kind of like learn more about what I'm up to. And I love educating on there as well. And I think the biggest reason to get in touch is if you're looking to like take that step into becoming a passive investor, but you also want to learn along the way. Like you just want to gain the confidence in what this looks like. And I find a lot of people, it's a gateway, right? Like you're doing your first deal, but you also want to kind of learn about the industry and like what's possible on the other side. So I'd say that's definitely a good reason to reach out. And then, of course, I actually have access to deals that I'm actively bringing investors into, and I have a lot of exciting opportunities this year. But I love speaking to other people, women especially, about real estate investing. So definitely reach me out on LinkedIn, or you can go to my website, highlycapital.com, where I have a lot of podcast episode. I have a webinar that goes to the A to Z of multifamily investing. And there's a lot more amazing education on that site. And people can join my calendar on there if they want to schedule a call as well.
Yeah, definitely. I always say that the point of doing these episodes is to network with the listener. I get a lot out of it by meeting
Same.
people like you and talking to people like you and seeing what you're up to. But I think the main reason we do it is this networking opportunity that we didn't have even like how long has this been going on? I interviewed the grandpa of podcasting recently. I think he said he had like podcast number 9 in 2004. So this is a fairly new way to network with people. And we do it because we want you to reach out to us. Jump on our calendars. You can get a hold of me at partnerwithrise.com or a hold of Sarah at highlycapital.com. And don't forget our Monday night club meeting where we just go over deals, keep each other accountable. Sarah, if you ever had any deals you want us to take a look at in that club meeting, would love to have you come and present to us. That's at riseclubcapital.com. And I really appreciate you taking the time out to share your life with us. I have been looking forward to this interview for quite a while because location freedom is something that really motivates me. And I find that talking to other people who have similar motivations is really inspiring. So appreciate you sharing some of your time with me so I can enjoy that and also some time with our guest.
Yeah, no, thank you so much. It's so nice to speak to somebody who's like minded. It's always a pleasure.
All right. So we will see you guys at our website, on our meetings, on our calendars, because we can't wait to hear about your next passive income adventure. Thanks for joining us today.